Hey, all, welcome to ShareTreck. Today is Sunday, the 13th of March, 2022. And I'm really happy to note the fast growing subscriber base. We are up to 260 now. Thanks to all the subscribers and existing subscribers and the new ones. Thanks for encouraging me to keep this channel going and coming up with better videos. So having said that, today I want to take a look at Beam Therapeutics. This is not a pure fundamental analysis. This is just an effort to look at all the available information and to form some opinions regarding how good Beam Therapeutics is as an investment proposition. So with that in mind, let's get started. One of the major challenges in doing fundamental analysis on genomics companies is that they don't have revenue streams. They don't have a track record of dividend distribution, and the pipeline itself is fraught with risk. So it's very, very difficult to do a traditional fundamental analysis on genomics companies. But in this channel, we do daily technical analysis, which is a very short-term price movement related analysis. So I thought that it's about time that we try to attempt something closer to a fundamental analysis on our biotech companies. And the first candidate that came to my mind was Beam Therapeutics, because if you recollect, yesterday we had posted a video where I was talking about how CRISPR-Cas9 fits with base editing and with prime editing, and also the Rosetta Stone that's being developed to keep track of all the ways the immune system works, and how all of these can be put together. Given those things, I felt very interested in looking at Beam Therapeutics, because Beam is the only base editing company, to the best of my knowledge, at this point of time. And with Prime Medicine coming into the picture with the support of Beam to focus entirely on prime editing, it seems that Beam Therapeutics deserves a closer look. Having said that, there is a very, very big risk factor, in my opinion. Of course, these are all my personal opinions and not financial advice. In my opinion, the biggest hurdle for Beam Therapeutics, especially when it comes to prime editing and base editing, is the size of the molecule and the delivery mechanism. However, given that ex vivo can be a much better approach in this condition, all those pipeline items in Beam Therapeutics, which are ex vivo, would be exciting for me, whereas in vivo would mean that they have to overcome the biggest challenge of delivering the bigger molecule into the body. So that's the main concern I have. But let's get started and look at the numbers first, because the numbers are where we do the fundamental analysis. So as I mentioned earlier, this is not a pure fundamental analysis. This is my attempt to do a fundamental analysis on Beam Therapeutics, and I hope you like it. And you can always put your comments below to guide me to make this better and more accurate. That's always welcome. Okay, so here we have this spreadsheet, and the information I have collected is from various sources on the web, and I have cross-checked to do some sanity check on the numbers so that we have proper numbers here. So I'm comfortable presenting this right now. What we have here is total outstanding shares. If they are 100%, then insiders are holding 2.15%, institutions are holding 84.05%, and individual investors hold 13.80%. So in terms of value in terms of number of shares in millions, it is in this column out here. So individual investors are holding 9.38 million, whereas institutional investors hold 57.15 million. And the overall market capitalization is 4.15 billion as of the market closing on 13th March 2022, with a price of 60.91 per share. So this piece of information gives me two thoughts. The first thought is that if institutional investors are so heavily invested, that means that they are feeling confident that Beam is going to be able to meet its objectives and be profitable. So that's a very positive message that comes through from this data set. The other message which comes through is also a note of caution, because those investors who invested early and probably around the time that the institutional investors started investing, or maybe slightly before, they definitely are in positive at this point of time, and they have less risk. However, those people who have been investing at a later date at a price higher than the one in which the institutional investors got into Beam Therapeutics, they have a contingent risk. And that risk is if any of those huge institutions decide to get out of this share, then the share price drop will be phenomenal, and losses could be high. So one of the recent examples is, I think it was ARC-K. They took their stake out of Palantir, and the share dropped very precipitously. So those kind of possibilities are there. I'm not saying it's going to happen, but the risk of that happening is always there. So in that context, I have this table here, which talks about all the investors, institutional investors who have invested in Beam Therapeutics. Top of line is ARC Investment. They have around 8 million shares, and it's around 27.8% of their of the Beam stock that they are holding. So if you look at the list of institutional investors, we have some really serious names like Vanguard, BlackRock. These are solid investment companies who do their homework very well and always pick winners. So we are in good company out here as Beam investors. But if any of them decide to pull out, they're going to sell a whole huge range of a huge volume of stocks at the same time, and that would mean a heavy drop in the share price. So that's the only risk out there. Apart from that, the participation of all these institutional investors gives much more confidence on investing in Beam Therapeutics. So having said that, let us look at the price to earnings ratio. And if I look at the PE ratio, it's all negative. Again, traditionally PE ratios and price to book ratios are what is used in order to determine the value of a company, whether the share is fairly priced, and then peer comparison is done on these parameters like price to earning and price to book to see how other companies in the same sector are being valued by the shareholders, and based on that one can say whether a particular share is undervalued or overvalued. But in our genomics space, different companies are in different situation. Some companies' value is derived by the fact that they have the IP, and they have collaborations based on the IP where the collaborators are paying them money, whereas the others have no collaboration. They just have IP license that they have paid for and bought. So it's very difficult. So if we look at price to book value, right now with a price of 67, sorry, this should be 60.91. With a price of 60.91, our price to book value is 5.88. So right now, I would say that if you traditionally look at price to book, value investors would look at around 3 or 4 as price to book to get into the business. And I think we are very close to that level. So if we look at the overall market and how things are falling, if this was a traditional company and not a company that is still in the process of being profitable, we can say that a price to book of 3 or 4 is fair, but 5.8 is rich. However, you have to look at this business from a different point of view, because if any of the pipeline items that we have in Beam Therapeutics were to monetize, the returns are going to be phenomenal. So you can't discount that. So in a sense that we won't look at this as a traditional company, but we are going to look at this more as a promising company which is going to come up with a product that is going to generate a huge monetary benefit. So from that point of view, I would think that the price to book value of 4 could be justified. And we still have ways to go before we come to a price to book of 4. And 5.88 seems fair play at this point of time, because we don't know how the market volatility is going to change. If the volatility changes, then the price to book may even spurt up to 7 or 8. So that potential is always there, and that movement can happen pretty fast. One thing that we have to keep in mind is the current volatility in the market. If the Ukraine-Russia conflict gets resolved very quickly, it can happen suddenly. Then the price of oil might drop, and when the price of oil drops, then the VIX will drop, and when the VIX drops, the Nasdaq will go up, and all those things can happen rather quickly rather than gradually. So from that point of view, 5.88 seems attractive because you don't want to be chasing this at 7 or 8 price to book. So again, it becomes very confusing. If I was to invest in Beam Therapeutics right now, I would put a little bit of money, but I'll dollar cost average on the way up. Everything depends on how the market opens on Monday. And of course, we'll be doing our technical analysis to determine the short-term prospect of 3 to 4 hours of price movements. So if I was to give you an answer right now, whether Beam Therapeutics is rightly valued to buy, my answer is I don't know. Honestly, I don't know. To get more clarity, let us take a look at the pipeline and see where the pipeline is and what are the kind of revenue Beam Therapeutics is looking at from its collaborators, and how much money it has got on its balance sheet. And let us try to see if that can help us to decide whether Beam Therapeutics is worth buying at this price. So as you can see in this slide, we are going to talk about the pipeline and the cost. But first, let us look at the types of therapies that Beam is working on. They are looking at gene correction, gene modification, gene activation, gene silencing, and multiplex editing. So you can find this diagram on their website. I have taken this from their pipeline page on the company website for Beam Therapeutics. And the important thing to note here is that their license for CRISPR comes from Broad Institute, so they are on the clear with regard to their the value of their license. And they are attempting both ex vivo and in vivo approach for various therapies. So out of these two, I'm more excited about the ex vivo therapies. And I'm hoping that it's going to reduce the risk and decrease the duration to monetization, because it's much less complex than in vivo approach, given the size of the molecules that they are working with. So having said that, let us look at the pipeline itself. So in the pipeline, we have Beam 101 for sickle cell disease, which is at the phase 1 or 2 clinical trials. And Beam 102 is still in the IND enabling stage. And the others are all further behind. So let us look at where Beam 101 is, because that's where we have our major opportunity to look for monetization. And I'm thinking that the competitors like CRISPR Therapeutics are also working on sickle cell anemia. So whoever is off the block first is the one who is going to garner the maximum market share and establish themselves in the market. And the one who comes in afterwards will have to compete on basis of price to attract market, and that will bring down the overall pricing of the therapies. And when it comes to talking about the pricing of therapies, I would like to add that there have been some novel experiments that have been done to reduce the price by states buying medicine on bulk from pharmaceutical companies. So there are various price models out there which can take the sting out of the high price and still make it affordable for the patients. So we'll talk about that in a separate video. But right now, I think we have to focus on Beam 101 and see where it is. So for that, we'll have to look at the latest press release from Beam, which would talk about all these pipeline items, and we'll focus on 101 and see whether it is making any further progress and if there are any hints of when monetization can happen. So as you can see here in this press release dated February 28, 2022, I've highlighted certain portions. That's what I wanted to focus on. So the first one is that the research collaboration with Pfizer underway with upfront and potential milestone payments of up to 1.35 billion. So there is funding coming around. The potential funding is already committed, subject to achieving various milestones. So that's a good factor out here. Executing first wave of long-term strategy for sickle cell disease with planned initiation of Beam 101 clinical trial and IND submission for Beam 102 in the second half of 2022. So last year, towards the end of last year, FDA approved Beam 101 to go into clinical trials. So we should expect that this year, in the first half at least, they should start recruiting patients and setting up everything so that the clinical trials can get started. And the starting of the clinical trial would be a very important milestone. And I'm assuming that Beam is going to put out a press release when they start dosing the first patient. IND submission is going to be another big milestone for Beam 102. And hopefully, if it gets approved, then we'll look at Beam Therapeutics doing another clinical trial for Beam 102 and getting started potentially by early next year. So let us again retain our focus on Beam 101 and look at this press release to see what more we can find. Strong cash position of 1.2 billion, including Pfizer upfront to support robust set of milestones across ex vivo and in vivo base editing programs anticipated in 2022 and beyond. So the balance sheet has got 1.2 billion cash, and also we have got 1.35 billion commitment from Pfizer subject to achieving various milestones. So that seems to be a pretty decent balance sheet condition, and it's also looking good for Beam 101. However, monetization is not in the horizon for this year for Beam 101. That is absolutely clear. Now, if we read further, it says, in 2022, we plan to continue this momentum by executing the first wave of our long-term strategy for sickle cell disease with the planned initiation of our trial with Beam 101, marking our transition to a clinical stage company and our anticipated IND submission for Beam 102. So out here, I think I'm excited about the fact that clinical trials are going to start for Beam 101. In parallel, we plan to actively advance the remainder of our pipeline in 2022, notably with expected milestone, including an IND submission for 201 for the treatment of relapsed and refractory acute T leukemia and lymphoma. Okay. So that doesn't mean much to me at this point of time from a monetization perspective. The next paragraph which attracts my attention here is Beam and Pfizer entered into a 4-year research collaboration focused on in vivo base editing programs for 3 targets for rare genetic diseases of the liver, muscle, and central nervous system. Under the terms of the agreement, Beam received an upfront payment of $300 million, and assuming Pfizer exercises its opt-in license rights for all 3 targets, is eligible for development, regulatory, and commercial milestone payments for potential total deal consideration of up to 1.35 billion. Beam is also eligible to receive royalties on global net sales for each licensed program. So there is a recurring revenue of royalties. Beam will continue all research activities through development candidate selection, and Pfizer may opt in to exclusive worldwide licenses to each development candidate, after which it will be responsible for all development activities as well as potential regulatory approvals and commercialization for each such candidate. Beam has a right to opt in at the end of phase 1 or 2 of clinical studies, wherever it becomes monetized, upon the payment of an option exercise fee to a global co-development and co-commercialization agreement with respect to one program licensed upon the collaboration, pursuant to which Pfizer and Beam would share net profits as well as development and commercialization cost in a 65 to 35 ratio, where 65% is paid by Pfizer and 35% by Beam, and likewise for the sharing of net profits. The collaboration has an initial term of 4 years and may be extended up to 1 additional year. So we have from this paragraph, what I take I take away is that Beam has actually outsourced the risk of in vivo base editing to Pfizer. So that's a good thing for the Beam stock, in my opinion. And Beam is going to continue focusing on ex vivo in wave 1, as we can see in the subsequent paragraphs. And also there is this option for Beam to get 35% share in one of the candidates is a very good option that Beam has got in front of it. And the fact that there's going to be royalty revenues is also a stabilizing factor for Beam share price going forward once monetization takes place. Now, if we look at the ex vivo, which is where I'm very interested in. The wave one is going to be ex vivo base editing via autologous transplant. So I have both ex vivo and autologous, both of which I'm very bullish on. Autologous, because as I mentioned in my earlier videos, the immune response challenges are minimal in autologous transplantation. And ex vivo, because of the large size of the molecule, it has got less issues. So these two put together, I'm excited about wave one, and this makes me slightly more bullish on Beam Therapeutics. So in this approach will be deployed in the company's Beam 101, again, which is the foremost candidate, and Beam 102 base editing programs, and is intended to allow the company to pursue an efficient path for development using increased validated clinical endpoints and regulatory strategies. So this makes me feel that the Beam management is outsourcing riskier portions of the program and keeping with itself the more easier low-hanging fruits, if I may call it, for the lack of a better term. So they have kept in-house ex vivo and autologous transplantation, whereas they have partnered with Pfizer for in vivo. And so that makes me feel much better about the prospects for Beam Therapeutics. So if we read further, they are also partnering with Magenta Therapeutics to reduce the toxicity challenges, because currently, in order to suppress the immune system, radiation and chemotherapy is being used. So if they shift over to MGTA-117, that would help them to avoid weakening the body and weakening the systems with radiation and chemotherapy, because with radiation and chemotherapy, there are going to be damage to the DNA, which the body's repair systems will try to fix, and they would be fixed in a defective manner. So that added risk comes to play in the background. So in my opinion, this is the partnership with Magenta Therapeutics, if it works out, is going to give a quantum leap in the success rate for Beam 101 and 102. So that's my opinion. Of course, I'm not a biologist, and my opinion has been formed by my readings at various sources for the pros and cons of going ex vivo and in vivo, and the pros and cons of gene therapy itself with regard to immune response challenges and toxicity challenges. So that's where I'm coming from. You should do your own reading also, but this video is supposed to condense all that I have understood and present it to you in an easy to digest format. So that's what I'm trying to do here. So if we go through further in this press release, it says cash and cash equivalents and marketable securities were 965.6 million as of December 31, 2021. And R&D expenses for the whole year was 387.1 for 2021. So if we assume that we are going to spend a similar amount this year for 101, and we are going to leapfrog the spending on 102 because it's going to go for IND enabling, and then we can definitely look at around 600 million approximately. Of course, don't hold me to this. I'm just a regular investor like yourself. I'm trying to spitball these things. So I'm saying 687 million potentially will have to be spent in 2022 in order to continue the pace of the development. So if that goes out of the 965, we still have decent amount of cash in the balance sheet. And of course, we have to remember that if some milestones are met, Pfizer is backstopping a lot of costs for Beam. So given all that and the fact that we have really good management at the helm of Beam Therapeutics, I'm feeling confident that Beam is likely to do well. And now we come back to the same question that we had before. What is going to be the price of Beam? Is it time to buy? So I would think, looking at this pipeline, that all our eggs are on the basket of 101, Beam 101. So what happens to Beam 101 is going to determine the fortunes of Beam Therapeutics, because 102 is just behind, but still it's not in clinical trial, and all the others are way behind. So when I'm looking at prospects of 101, I'm excited about the fact that Beam Therapeutics in parallel is also going to do wave one with ex vivo and autologous approach, which reduces the risk a lot. So we'll have to stay tuned to any press releases that come from Beam Therapeutics, giving us update about the progress of clinical trials of Beam 101. The first one of them would be, I would look at enrollment of patients and the dosing of the patients. Those are the catalyst points that I'll be looking forward to. And subsequently, there'll be data coming towards the third quarter, I expect at the earliest. Given these conditions and given the way the market is volatile right now with the Ukraine crisis and the inflation and the Fed's interest rate hiking, I would say that I'm very confident about overall about Beam Therapeutics. But if I don't want to lose my capital, I'm going to wait and watch what's happening with the Beam stock, and I would rather take my chances dollar cost averaging on the way up, because if we were to look at the annual price chart, which is what we'll do in a minute. So if we look at this chart for Beam Therapeutics, this is a long-term chart, and I'm going to convert this into a 5-year chart. Yeah, so this is a 5-year chart, and each of these candle is 1 week. So we are looking at a very zoomed out view of Beam Therapeutics. And the last time Beam was around 60.54 was somewhere around 7th of December 2020. Since 7th of December 2020, Beam Therapeutics has made a whole lot of progress. And all those progress were reflected in the increasing prices for the share of Beam Therapeutics, going all the way to a high of 138.55. And since then, due to market volatility, prices have continued to drop, and we have dropped now right to the status of around 60.91. And we are in a bearish downward channel that can be seen out here. And if we were to extend this channel, it would have gone this way. So we broke out and then we came back in again on that bearish channel. And right now we are in the bearish channel, and our next resistance is at 65.12, which was the earlier support. So that's the overall picture. And if we look at our MACD, we can see that MACD is bearish and the momentum is also below average. So these two have to move up first. And that will happen when the market feels positive about the overall sentiment in the market. The Ukraine crisis has to resolve, the oil price has to go down, the interest rate hikes have to become a little more benign with the inflation going down and the Fed not being very hawkish. All those things will promote the MACD to move upwards and the momentum to pick up. And those things will in turn reflect in the price of our shares out here. So the way I'm looking at it is that even though Beam Therapeutics is today at 60.91 and around a price to book of around 5.5, it was at a much higher valuation before, and it has not lost any of the innovations and developments and intellectual properties that it has developed. It has got collaborations now, which it did not have before, and the collaborations are guaranteeing money. Beam is also hiving off the higher risk part of its portfolio to collaborations and keeping the lower risk part to itself. So given all those things, I think Beam is today a superior company at 60.83 than it was probably at 127 on February 2021, or at 61.11 on 14th of December 2020. So whatever price movement we are seeing going low right now is a factor of the panic in the market with regard to all the risks that are inherent, and the fact that interest rate is going to go up. So the future values get discounted, future profits get discounted, and therefore the companies are valued at a lesser multiple. And that's exactly what is happening for Beam. And on top of that, Beam being a non-profit and non-revenue producing company, it's being penalized a little more. But price to book values are getting attractive. So I would say that we'll have to wait, and there is going to be plenty of opportunity to catch the price on the way up. That is my opinion. Of course, this is not financial advice. So please keep that in mind. In my opinion, for this share to go from 61.11 to its previous peak of 137.97 would take a long time. There is a long way to go. And if that has to happen based on Beam 101 passing clinical trials and getting into the marketing stage, then we have at least 1 year before that can happen. So I think the risk of losing out on dollar cost averaging on the way going up is much less as compared to risk of losing money because we are catching a falling knife on the way down. So that's how I'm looking at it. So from my personal point of view, I'd wait and watch Beam for going down further because of the market volatility and not because of the company that Beam is. Beam is a good company. The share price is not the company at this point of time. So I would watch for Beam to go down, and then on the way up, I would start picking it up as the overall market sentiments improve. Because I don't think Beam is going to come up in June and say that they have got approval from FDA to start marketing Beam 101. I don't think that is happening within the next 6 months to 1 year time frame. So there's plenty of time, in my opinion. So that's how I would take it. But again, this is my personal opinion and not financial advice. Please do your own due diligence. I hope you liked this video, and please put a like there so that more people can see this channel. And if you're here, please subscribe. And we are only going to keep on improving our content. And you have a lot to gain out here by being a subscriber, and it doesn't cost you anything. So thanks and have a great day. I'll see you on Monday during market hours. Bye for now.